is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Oh, look who we have.
It's a beautiful day. Look at our man, Jim from Minneapolis. We gonna take it by storm?
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7.5 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. To master love, you have to practice love. The art of relationship is a whole mastery, and the only way to reach mastery is with practice. To master a relationship is therefore about taking action, not about attaining knowledge. Market-wise, let's take a look at it out here. We have the Dow Industrials down 1,013, NASDAQ off 282, S&P's off 98 percentages out here. That puts the Dow down at 3.7%. S&P 500 down 3.4, and the NASDAQ Composite down 3.1. Gold contract up $30, trading at $16.73 an ounce. You got silver up 19 cents, $17.41 an ounce. Light sweet crude down $1, $45.82 a barrel. Notes and bonds. You got the 10-year up 13 ticks, 136.21. The 30-year up 0.9 ticks, 174.22, and King Dollar. King Dollar down 479 ticks, trading 96.857. The Euro's at 111. The yen is out here at 106.5, and the pound is at 129 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Well, first, let's go over to the futures. We'll look at the futures first. We'll get into the SPY. Futures market out here. From a high to a low out here today, you've gone down just 100 points. Bottom line, 107 points. High out here, 3113. Low, 3007. And if we take a look at this as we're coming into the next 60 minutes, closing up this trading day, what you're going to see here is going to get really interesting watching how this shakes out. The reason being is this. The first time that we came down, I got to make this bigger for you again, actually. So make it this way. There we go. Okay, let me do it this way. Okay, so what we're doing is this. You're coming down, folks, into Tuesday's downdraft, and the bottom line, it looks to me like 2990 is the number where there's just monster support at this particular point, and we made it to 3077. The way this market is trading, I expect what you're going to see here is as we come into the close, you're going to get a little pop in this market. And we'll see what a little pop means in an S&P market that go down 107 points. I suspect you can get up to, you can go up another 20 points in about a heartbeat coming into the close. That's how this is shaking out. Now, if we go over to the S&P and take a look at it, this is what you have happening, the SPY rather. So, what we had out happening yesterday is this. We went up with 176 million shares. We were going south with 284, and we have a high volume low of 385. Now, today what's happening is that you're going downtown with dramatically lighter volume. So we're getting close to the highs of the lows. The highs of the lows inside the SPY is 279.89. Now, I expect that's going to get tested again. The reason being is that we tested it on Tuesday. We had 300 million shares versus 385. You can see what's happening here. Now we're only at 127. That's the type of excuse me, folks, that's the type of downdraft and contraction of volume you actually need, that you're seeing that the selling is starting to subside. That's how this works. Now, it's Thursday, so what that is also saying is that more than likely what we're going to end up more than probably seeing is that this could very well go down and test that area tomorrow. That's how this baby is shaking out. NDX 100, same type of setup. We look at the Qs, you're going to see the same thing. The difference with the Qs is that the Qs didn't make it down there, which was a shame, and that's the heads up that you're going to be back down into that level again. The Qs had made it to 2007.62. The number we were looking for is 2007.17. And that's a problem when you don't get there. Gold contract, no doubt, not only caught a big bid. You are at the highs of the day. You have volume behind the move. This baby is going to go up and over the last high that we had out here, which is the 1691. This thing's going to be looking like it's going to be making the run for the 1795 area. So the gold contract is going to get really intriguing watching this whole thing shake out. Notes and bonds, if we take a look at it, what you're going to see is this. The 10-year bottom line hit 0.8976 today. And, we've been talking about this ABC down. There's no doubt it's been a straight line move. Big number, man. It's a monster number. And what I do expect we're going to see is that note and bond market, they're still buying notes and bonds hand over fist, folks. Hand over fist. 10-year note, bottom line wants to get down to almost zero. King dollar. What do we have with King dollar? We take a look at King dollar out here, and what do you have with King dollar? That is making its way back into the 95 area. You're down a half a penny today, or 500 ticks. Last 2 weeks we've just gone, couldn't break topside, 99,910. We're at 96,830. And when you take a look at this, what you'll see, this baby, the bottom of this consolidation is the 95 area. When we go over to the euro, we take a look at the euro. The euro looks like it wants to go to 125. And if that's the case, we will get 88 in the dollar. Yeah, the euro's strong like bull, man. Big time, too. Let me put this on. Yeah, you get a decisive break. This is a decisive break of the downtrend that has been in for so long. It's pretty amazing, actually. Yeah, and you get a break with volume. So the yen wants to get, the euro wants to get up to 124. Bottom line, what that says, that is saying that we go to 124 in the euro, you are going to be at 88 in the dollar index. The dollar index at 88 is going to put the gold contract over its all-time highs, folks. That's how this is shaking out. And as we make that run, we'll see if we have a much larger ABC structure inside the gold market, because as it goes after its high, if it takes its high out with volume, bottom line, you get a 2,500 price projection inside the gold market. Dow Industrial's down 1,100, NASDAQ off 320, S&P's off 111. We'll come right back.
Folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's down 1,100. Nasdaq's off 322. S&Ps are off 112. You get big numbers all over the place here, and this would totally make sense, folks, is if you want to see, some deals, well, guess what? The airlines are making deals right now. You can get a ticket from basically Miami to New York City for all of $50. The real question is going to be, does anyone want to get on the plane at all? But I expect you're going to see a lot more of those because, of course, those airlines have got smoked in a huge way. The market itself has got smoked, but if we go take a look at United Airlines, what you're going to see out here is it's been a one-way route. You go back 2 months, we're at $90, you're at $53.30, and it doesn't matter what airline you bring up. They're all the same. Oil market out here is basically also getting taken to the cleaners in a large way. Now, this is after OPEC came out and said that they're basically reducing the supply in a huge way. Right now, oil's trading $45.84, and we do look, if I take a look at this, and I'll put this on a continuous contract, bring this back a few, and you're going to, the next stop for oil looks like it's the $42. You break 42, and then you're going to have big problems. So we got a swing point at 42, and after that, you're down at $26. And you had the top commodity guy at Goldman Sachs come on today, bottom line, saying that he does see the oil market going into the $30 area. So these equities have got smoked in a huge way. We go into the $30 area, you're going to see it go a lot further down. Let's go to Jason in Florida. Hey, Jason, what's going on?
Good afternoon, Tom. How are you doing today?
I'm doing great, man. Yourself?
Fantastic. On the other side of the coast from you guys having record highs over there today, too?
No, it's gorgeous out, actually. And so you got a heat spell over there. You got a heat spell, yeah?
Yeah. It's nice and warm. It is beautiful as well, but spring, summer's coming early.
It is. No, I'm into there. Today's a beauty, though. We haven't, the day before yesterday was a little hot. Today's just, we get a breeze, and it's about maybe 78. So.
Very nice.
Yeah. So what are we going to look at today?
Wanted to look at the VIXY.
Okay.
Started a position back whenever it was 11, and had a core position and just been playing it all the way up, adding to and then taking some off the table and then adding back. Wanted your initial take on that, and I know it's not a long-term instrument, but it was so low, and looking forward.
So let's take a look at it. You got the ProShares VIX shot short-term ETF. This is in the futures market, folks, okay? So the low for the year out here is $10. The high's 28. You're at 22.49 right now. And you're going right for the highs. So the last high out here was 22.30. Let me put this back. Oh, interesting, man. So 28. Well, I mean, this thing does want to go to 25.50. The way that I would I would close this position right now, actually. Even though I'm saying that it wants to go there, and this is why, Jason, right? The broad market. So picture this. This is where the risk comes in right now, folks. You get the broad market. We're down good, right? You're coming into the highs of the lows of last Monday, or Friday, actually. No, Monday. And your volume is contracting way too much. So what tends to happen with this vehicle that you have, and I'm sure you know it because you trade it, if the market basically, let's say the market tomorrow just, gaps up 400 points, 500 points. This thing will go down further than it went up, like overnight. Do you know what I'm saying? So
right.
you got to, you're up big money right now. So you just got to figure out, this does happen, but the last time this happened in this vehicle, you almost have to go back to 2011 or you got to go back to 2008.
Actually, that's a great point. If you could bring it back there, and maybe you can help me wrap my head around something. And I understand this vehicle with the decay, and then when it rolls the contract, if you go back to 2008, can you see the numbers that it's printing on that?
Oh, yeah. I was in that market. Yeah, for sure.
But, I mean, so, like, you got the lows, $10. Back there, if I'm recalling, I mean, it's like 10,000.
You know what I'm saying? Yeah, no, I do, but I can't do this quick enough on the air. I can tell you that. But
no worries. But it's a little bit baffling. I understand because of the decay and whenever the market, all it's been doing is going up. And they're rolling that contract, it keeps contracting. But
that's right. That's right.
That spread is huge.
The spread is huge, but what you want to. This is my point. Okay, so let's pitch this. You're down 1,000 points today, right? If you only go up 500, and this is up $3.55, but if we go up 500 or 600 and you gap up 500 or 600, this thing can open down $5, even though it went up $3.50 today on the aspect of a big market. And it's because of the way that the leverage is inside the futures market. So,
I got you.
It's a beauty. I understand what you're saying, and the aspect of where this was trading, when you look at the chart from the aspect of where it is now. But we do want to remember, so remember you're trading a derivative, and if we bring this back, what you're going to see is that this derivative of what it's trading off of, it went from 666 up to 33.93. Okay,
right.
So now that's just real numbers. Now put the leverage on top of that. You know what I mean? Yeah, listen, you got a great trade. The hardest thing here with highly volatile markets like we have is figuring out when you want to take your money off the table. And overnight, we're all taking very large risk, whether you're a bull or you're a bear. So that's where you just got to figure out where do you stand, what type of risk do you want to take? Because what ends up happening, folks, if you're right on the deal, and we're still in a market that's going to gap up or gap down 500 points. That's the market we're in. So if you're right, great. Okay, if you're wrong, all of a sudden you're smoked. And thus far, the way this market has traded, whether you're a bull or a bear, I mean, if you're a bull on a long-time basis, have a portfolio, yes, you're down money. If you're trading, you're a bull, you're a bear, there's no reason that you haven't made money almost every single day. Because we've had both up and down by a dramatic amount of money, dramatic amount of points. So.
No, I appreciate it, Tom. Appreciate the show.
Okay, man. Have a great one. Have a safe one. Let's go take a look at some of the higher volume equities out here. This is you get the downdraft going, but this is going to be light volume as we're coming into the lows that were established, or the highs that were established last Monday. You got Apple down at 10.58. We got American off 2.35. Comcast is down $2. I suspect if we go inside the Dow Industrials, yesterday we went inside the Dow Industrials, and you had everything green, and there she goes. And today everything is red. Boeing is the biggest negative inside the Dow Industrials. That's putting 149 negative points. You get United Technologies putting 82, Goldman's putting 79, Apple's putting 73. Stay right there, folks. Come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN has developed a daily programming lineup for traders by traders. We start every trading day live at 8:30 a.m. with Tommy O'Brien hosting the morning market kickoff as he starts the day off by breaking down everything you need to know about what's going on for the trading day ahead. At 9 a.m., Larry Pesavento takes your calls and questions live on the air for the opening bell as he hosts Trade What You See. At 10 a.m., Tom and Tommy O'Brien host a Bull Bear Trading Hour. At 11 a.m., it's Kevin Hinks and Alex Coffey from TD Ameritrade Network with Fast Market. Basil Chapman at noon with the Tiger Technicians Hour. Steve Rhodes hosts the Trader's Edge at 1 p.m. Dave White with the Power Trading Hour at 2 p.m. And Tom O'Brien closes out the day for the final hour of trading live from 3 till 4. Don't miss a second of our daily programming lineup. Tune in to Tiger TV every trading day live at TFNN.com. Educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 1,100, Nasdaq's off 331, S&Ps are off 114. And so here's a couple of these airfares. You got Frontier, New York, Miami, $51. Delta, New York, London, for under $500. These airlines, man, they're going to basically, they've already taken it on the chin, but this is going to be pretty intense. How they're going to try to get people back on those planes so early. I mean, this is way too early to even think about getting on a plane. There's no two ways about that. Well, when we take a look at the good old King Dollar, folks, and what you're going to see with King Dollar is this, is that the euro is taken off topside. The dollar, had been going up since February of 2018. Bottom line is, first it had broken the its trend the first week of October, gets above the whole highs again, and then just gives it up in spades. So that is setting up, first off, a 95 in the dollar. Right now you're trading 96, 686. But bigger, folks, is that when you take a look at the euro, this dollar looks like it wants to go all the way back down to the February lows, which is the 88 mark. And if that's what we have, what you're going to see out here, I'll bring this gold contract up. You have gold on the move in a big way. We take this, and I'm going to put this on a much larger scale so that you can see actually where we are in the gold market, because I'm going to take this back all the way to the beginning of the bull market in gold, which started in 2002. Then you had a 50% retracement of the whole move, and now we're taking off once again. So your all-time high right now in gold is 1920. We are at 1672. Your next stop, I figure, is going to be at this 1794. Now, the real kicker here is that as we expand it up, I mean, this thing is moving higher with monster volume behind the move. That would be saying, and if we get this volume as we get up to 1920, guess what? That's going to put gold at about a 2550 level. Now, the chart you were just looking at, that is a monthly chart, so it's a much longer basis, okay? We're talking, 2.5 years or something. But the bottom line is that that's how that is set up. And, technically it's set up like that. Fundamentally, it's set up like that now. Why? Because of this interest rate structure. When we take a look at this 10-year yield, you are going to see, I'm going to bring this back to the beginning of the bull market in bonds and notes. Now watch this, folks. This is the largest bull market that any of us have ever seen, okay? When you bring this back, you're going to see that it started in 1981. So check this out to put in perspective. In 1981, the 10-year yield, you're not even going to believe this, this is like hard to comprehend, was 15.84%. So at that particular point, you lend money to the government for 10 years, you're going to get 15.84%. This has been a one-way route all the way down. And now what we have done is that the market was holding at about 1.5% from 2012 until 2 months ago. And then we just blew through that low. I mean, in spades, too. So this price projection here is going to give you a price projection of just about 0 on the 10-year. And you get 0 on the 10-year, then we are going to be running at approximately 1.75 or 2% on the 30-year mortgages. I checked in with our man, Mr. Bud Spriggs, today, our mortgage broker, who does an update every Friday at 3:15 in the afternoon. Now, the best quote that he has quoted this week is 3.25 with someone that does have good credit. So just as Bud had said last week, he was telling us last week, even though the 10-year had gone down so dramatically, the rates themselves haven't moved as much as I particularly thought they were going to move. We'll see how that shakes out as that, and if that 10-year continues to go lower, as I expect it will. So it's going to be quite a ride, I can tell you that. We got to take a look at some of the higher volume. Well, let's go actually look at Apple, because Apple, you talk about up 10 points and down 10 points. I mean, that's just how Apple's been trading the last few days. We go to yesterday. Yesterday, stocks up 10 points. Today, down 8. Apple also is setting up. This baby, I suspect, is going to get back down to 278. But you can see out here today, you get a large contraction of volume as you're pulling back. And the more that you get a larger contraction of volume as you're pulling back, the higher the probability is that you'll basically stabilize for a bit, get a bounce, and that would be the end of the first leg down. Because when you take a look, folks, now this is what's going to be dangerous about the marketplace in general on a, let's say, a 3 or 4 month time frame. If I take and put the S&P cash up and we take a look at this, what you're going to see is that we made it down to 2855. Well, 2880 is the highs of the lows of 2018. 2346 is the low. That's another 700 points down. That's game. That baby is game. And the reason it's game, folks, is this. If we take a look at this, what you're going to see is that that's where we broke the uptrend, and what it ended up happening is this, is that we had broke that uptrend in December of 2018. It pops right back on the other side, which they love to do, and then it broke it and came down with a vengeance. I mean a vengeance. We went from well, we know what we did. I mean, this is one of the fastest moves in the S&P last week that has ever been out there. Let's go to our man Frank in Gloucester. Frank, what's going on, brother?
Hey, how are you, Tom?
I'm doing great, man. Yourself?
Good, doing fine, thank you.
Good to hear from you, man. So, hey, is spring?
Yep.
Is spring? Are you overlooking those rocks? And is spring getting there, or what?
Yeah, absolutely. Yeah, it's coming in. It's been a little breezy up here, but the temperatures of 40s and 50s here and there, and nice to be outside.
I love it. So, Newmont, right?
Well, I'm looking at all the gold equities and the charts, and most of them haven't responded too well yet.
Right.
But Newmont broke the swing high the other today.
No, this is a good setup. Let's take a look at it. So, Newmont, folks, is one of the largest gold companies in the world. We take a look at this, and then what you're going to have here. Oh, look at this is nice, man. So this just broke. But
the volume's very low.
Yeah, it is. It is, and it broke the swing from 2016. Let me see. That's 140. Well, here, no. Watch this though, Frank. 149 million was the high. Was the highs of August of 2016. Yeah, but here, watch this. See on the monthly, this is an ABC up. This is cool. I mean, this is a heads up, folks, in a big way. So last month, we did 168 million shares. The swing point had 149. So now let's do this. Okay, so approximately 45 is your B point, 15 is your A. You got $30. Your C point, that would say, well, $58 and like 50 cents. That's the price projection, man.
Nice.
So that's that's the high of September of 2012. Now, see, this makes sense because if you set that up, Frank, with that 17.50 in the gold market, that's kind of the same place, man. But this is an ABC up. It's confirmed ABC up. So.
Yeah, but the other equities don't look anything like this.
No, they don't.
They haven't even crawled up yet.
No, they don't. Here, just stay right there, okay? Come right back.
Okay.
Stay there, folks. Come right back. We have the Dow right now down 1,000. NASDAQ is off 292. S&Ps are off 100. We'll come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Dow's down 1,071. Nasdaq's up 309. S&P's are up 105. We're talking to Frank in Gloucester. We are talking the gold equities. Yeah, there's no doubt, Frank, that, and you've been through this before, I mean, what ends up happening in this gold market, you know, Newmont's strong. A lot of the others don't have enough volume. You know, we had that sell down last Friday, which is a serious sell down. And you just got to stick with the ones that look a lot stronger, because there's plenty of them that are not strong at all. There's no doubt about that. You know, Barrick looks pretty good too. I mean, the two that what you will have is this. This is what ends up happening, folks, inside the gold market in general. There's plenty of financial advisors that don't know the gold market. So what they will do, as they're like broker dealers, whether it's Morgan Stanley, Goldman, you know, Citigroup, as they turn around and they say, okay, listen, we like the gold market. You know, Jeff Curry was out there today saying, from Goldman, saying that, you know, they felt that gold was a conviction buy. So what a financial advisor would do is buy the two biggest gold stocks. That is, you know, that's smart of them. That's the real bottom line, okay? And that's what I think we're seeing out here. Do you know what I mean? So
okay, yeah, okay.
You know, because it'll be new people and new advisors that haven't been in the market. That would be the safest bet, you know, because you can see that it doesn't matter. They're throwing the good babies out with the bad babies, and that's how it works on downdrafts anyway. So
on the chart, over the last week or two, are we seeing a volume climax here at the bottom, the recent bottom?
I would say that yes, that's correct. I would say this. So watch this, folks, okay? If we take a look at the NYSE, I'll just use that. That low is 2.6 billion shares, okay? So yesterday as we went up, you did 1.3 billion. And I was saying, hey, man, there's not enough volume on the way up, okay? That, you know, bottom line, you pull back. Now what's going on, which is really cool if you're a bull, is that you only have 877 million on the way down. If we go back and we take a look at the SPY, what you're going to see is that the sellers are drying up dramatically here. You know, you get 144 million. You know, yesterday we go up with 176. The 144, man, is coming into 238 as well as 385. So that's the type of bottom, and I'm not talking about a long-term bottom, I'm just talking about maybe 6-7 weeks, that you like to see come in, you know. And we'll see, you know, bottom line is that we very well could test that tomorrow. And if we do, it's going to be pretty cool, man, you know, because I suspect we've been down enough right now that the bulls are not going to be comfortable. The bears aren't going to be comfortable. and that's what it takes. That's what it takes to really to get the first short-term bottom in. Do you know what I mean? I think this is going to be playing out a bit longer. See, if we go over, we know the transports have got killed, but you got to pay attention to them, folks, because what has happened is this: is that the definition of basically, you know, a larger correction is over 20%. Well, the transports are already down 20%. They're trading back where they were in November of 2014, which makes sense, okay? And you could make the case and say, hey, well, that's makes sense because no one wants to get on the plane. What I found out years ago, and you're probably listening then, remember when WorldCom first, went bankrupt, folks? This is going in the 2000, right? And I remember how many calls were coming in here saying, well, no, this is different. And at that point, I didn't know whether it was different or not, okay? Because first you had WorldCom go down, then you had 2 or 3 companies go down, one after the other. Well, it didn't make any difference, folks. It was at the beginning of the debacle on the way down. And that's why you want to pay attention to any large indice or sector like the transports, because that very well could be the beginning of a real 20% haircut inside the S&Ps. Because the only thing that has still held the S&Ps higher, you get Microsoft in there, you get Apple in there. I mean, they're still powerhouses. But if they fall apart, guess what? You can be down 20% pretty easy. And the small caps have been saying for a long period of time, the small caps should have got to a high, and they didn't. If we take a look at that IWM, you're going to see the IWM is ready to go after the low of 125. You're at 146. You're deep into that bar. I mean, this is really close of basically breaking the bottom of it. So we'll see.
What you're saying is, like with the NASDAQ bubble, it became a narrow advance.
Yes. Yes. Yeah. And narrow advances are very dangerous once investors have to sell what they have left, because if they leverage themselves up, what ends up happening is that you can make money, make money. They leverage themselves at the wrong time. Then you have to sell down. You sell down, and that's when the bids disappear. And in this particular case, we had talked about this on the air. There's a whole generation that has never seen a pullback in the marketplace. If picture this, if you let's see, so 2008, so 12 years. Picture you're like 30 to 42 years old. You're getting in the market then every week, every month. Your account is higher, and then all of a sudden in a week, you took a 20% haircut. I mean, we were lucky, Frank, because the bottom line is that we saw plenty of them between like 1980 and 2000, even before the 2001 really came in. So,
hey, I started with you in 1998. Boy, am I glad I did.
That's too funny, man. I love it. Isn't time a weird thing, man? I'm telling you. Holy cow.
Shit. I got a big birthday with 0 tomorrow, let me tell you.
You do? Happy birthday, man.
Yeah. Thanks.
Hey, listen, this is what you got to do. Just start counting backwards now. That's what I did. No, I swear to God. I hit 60, folks. I start counting backwards. It works, man. It's a head game. It's a head game.
I wish it was 60. Yeah.
Oh, go start counting back. Double it up then, man.
All right. Subtraction. That funny addition. Subtraction.
Yeah, totally, man.
Yeah.
Cooking, brother.
Thank you, sir.
Thanks,
Bye-bye.
Frank. Have a great one. Have a safe one. I'm telling you, folks, count backwards because it does work. It gets kind of bizarre when you're getting closer to you hit 60 and you get closer to 50. It's like, okay, then what are you going to say? Start counting forward again. But it is what it is. 877-927-6648. Let's go look at the big dog, Amazon. See what Amazon's doing out here. So Amazon right now, flat. Well, it's down $49. That's a flat market for Amazon, though. Amazon, you look for it to test this 1889. Right now, you're at 1924. Go take a look at Google. Google out here. Oh, this is interesting. Oh, this could be dangerous. Okay, look at this. So I'm glad we pulled this up. Oh, this is dangerous now. So watch this, folks. I'm talking about the market testing the highs of the lows, but guess what? Google is just dug into this. Google wants to test the low. So what this is showing, right? This is showing that that Google is weaker than the NDX 100 or the NASDAQ Composite. The reason being is that the NDX 100, as well as the NASDAQ Composite, has not got to the highs of the lows yet. So that's going to be a big heads up. I wonder what that's all about. Big number. Stay right there, folks. Come right back.
I'm certain you are are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow down 994, S&P's off 95, NASDAQ Composite off 271. Let's go inside that NDX 100. So we were just talking about Google not be as strong as the NDX 100. Inside the NDX 100 out here, the strength versus the weakness. You have Citrix. Now, it's going to get interesting because Citrix, okay, chip business up 6.5% in a bad market. You get Seattle Genetics. That's a highly volatile stock that goes all over the place. JD.com is up 1.2%. NetEase is up 1%. What has happened, folks, is this. Here, let me show you this market quick. Well, take it away from it. You get United down 13%, American off 13%. Let's go over to China for a second. What you're going to see here is that China, bottom line is that we go to Hang Seng, and Hang Seng was up 2% last night. Now, needless to say, those markets have got absolutely smoked, but the bottom line is that it held its lows, man. It held the strength going all the way back to October of 2019. You're up $545 last night. You're at 26,700, and if you happen to be watching Tiger TV and watching my screen, what you're going to see is that you had an explosion of volume on the way up. So that, this is the first week that China basically got off its lows. You're going to see the test, and what China was doing, that was testing all the way back of the strength that it had in October of 2019. So once you think that there's only one way the market can go, folks, bottom line, that's not how markets work. There's no doubt it's all about fear and greed. And this particular one, it is different that we're not talking a money deal. We're talking about a health deal, and we'll see how many businesses get hit with the cash flow, because it's all about cash flow. The airlines get hit with the cash flow, no doubt. You got importers getting hit with the cash flow. The real question is that how many parts are not coming in so production can slow down, and then how many people are going to get laid off, and that's what you're looking at here. You're going to look at the market is resetting itself on the number that the PE is going to be. The S&P had been up to, I think, 24. Bottom line, at lows, it can go to 14. At highs, it's basically 24. Have a great night, folks. Have a safe night. Come back and visit us. 8:30 tomorrow morning. Tommy kicks us off. Morning Market Kickoff. Great program. Look at them, folks.